Hi, I'm Mike McCluskey, Head of Partnerships at FinTech Sandbox. I'm happy to introduce Vero Technologies and their CEO and co-founder, John Mizzi. Vero has come up with a unique lending as a service offering for banks and credit unions, and Vero's platform helps these financial institutions offer inventory financing to dealers of manufactured goods. Vero's commercial lending platform helps banks and credit unions offer a diversified set of credit products to small and medium-sized businesses without adding any new headcount or investing in new systems. Vero recently closed a $4 million seed round and has raised a $50 million credit facility. Given the price dislocation in today's auto market, dealers need Vero's solution more than ever. So with that, please welcome John Mizzi, the CEO and co-founder of Vero.
Good morning. My name is John Mizzi, and I'd like to introduce Vero Technologies and our lending as a service platform for inventory finance. Dealers of manufactured goods spend nearly $1 trillion a year on wholesale purchases, and nearly all of these dealers are using some type of inventory financing. Typically, a dealer will go to acquire inventory from a manufacturer, auction, or another wholesale channel, and lean on their lending partner to advance the funding of wholesale purchases on the dealer's behalf. When the dealer sells the asset to an end customer, let's talk about auto dealers specifically here, they will then pay off the lender principal and interest from the proceeds of that sale. While this seems straightforward, think about a single dealer who's retailing hundreds, if not thousands, of vehicles every year. The lender has to take possession of titles, verify the condition of vehicles, which are the collateral on this type of structure, and ultimately monitor dealer operations to ensure compliance with their programs. If you're still wondering why banks are not offering or operating in this space, contemplate the challenges of underwriting SMBs on top of all the traditional credit products that a bank might offer today. We at Vero have built out a lending as a service platform that encompasses both an end-to-end technology solution that supports every step of the lending lifecycle, as well as a services offering where our in-house credit and collections operations can act as an extension of the bank's own commercial lending organization in order to administer the floor plan program in partnership with the bank. One important detail to remember with inventory financing is that you always have three stakeholders involved in any transaction: the supplier, the dealer, who's your borrower, and a lender. We've built the first tri-party system that connects all three of those stakeholders to perform their respective responsibilities as it relates to making the wheel spin on inventory financing. We've had success to date with an emphasis on the borrower experience. We've not only built a portal for dealers to manage details around their inventory financing, but further have gone so far as to build a treasury management system purpose-built for dealers of manufactured goods, with pricing calculators, inventory analytics to help them make smarter purchasing decisions, and workflow automation that allows dealers to ultimately spend more time out on their sales floor rather than back in their office dealing with the administrative headaches that come with inventory financing traditionally. Finally, when dealers are, in order for a supplier or a dealer to floor a vehicle, naturally, it's a simple four-step process similar to an e-commerce checkout that you might be familiar with. Dealers enter acquisition details and provide the necessary documentation for funding, which is then handed off to our funding services team for review and approval as needed. Again, underwriting SMBs is challenging. Our team of underwriting experts with experience in inventory financing aggregate and pre-screen applications and then hand it off to our bank partners for decisioning. Finally, I'd like to show you what our servicing team relies upon as just part of their day to support the scaling of these programs with our bank partners. Funding requests are ultimately the highest volume of transaction activity that we need to manage. While certain types of requests are automatically approved, for those requests that do require human eyes, we've given all the data in one place for our funding services team to review and decision and send responses back to the dealer in order to move quickly and handle the high volume of transactional activities. We've been fortunate to move fast. After launching our lending operations 6 months post-incorporation, over the last 10 months, we funded more than $15 million in wholesale receivables on behalf of our dealers. We've evolved from our on-balance sheet lending, direct lending program towards our off-balance sheet lending as a service engagement model following completion of participating in the ICBA's FinTech Accelerator program, where we were able to meet with more than 150 banks and build a pipeline of banking partners to onboard through the rest of 2022. We recently closed our seed round and are looking forward to kicking off our Series A in 23 after further validating the lending as a service engagement model. Our team of 11 encompasses banking, mobility technology, and inventory finance executives, which with a track record of successful exits and industry expertise. We're focusing on bringing transformational change to both dealer and banking populations. To date, we operate and support the needs of dealers in auto, marine, RV, and power sports vehicle dealerships, and look forward to continue to expand through bank partnerships to cover additional verticals like agricultural and construction equipment. We look forward to connecting with any investors who are interested in following our progress as we work towards our Series A. Thank you and have a great afternoon.